In today's energy markets, let's take a look at WTI Crude futures as they're experiencing some selling pressure today. Crude futures trading lower 3 out of the last 4 sessions, and today's price action has us down about 2% currently, negating yesterday's rise. And with today's price action, we are now trading lower than where we started the week. Last Friday, the close was 76.84, currently priced at 76.60. So after the big run up early in the week, prices have come down quite substantially, and now on a week over week basis, actually trading lower. Also, I want to point out September is closing out here. We're seeing rolling of positions into October, where the October future is now the more actively traded future as we move towards expiration. Now, driving factors today, one of the primary drivers appears to be geopolitical, as really that's been one of the drivers throughout the week. Couple that with inventories, as inventories continue to remain at the top end of the range, and there are indications that inventories are continuing to build in certain parts of the globe. And I think that's another factor contributing to the selling pressure that we have experienced the second half of this week. Now, looking at the rigs week over week, we actually did see a decline in active rigs. So the Baker Hughes rig count showed a decline of 2 oil rigs week over week to 483 rigs. And gas rigs actually increased by 1 week over week to 98. So a little bit of a continued consolidation in the rig count levels, but nonetheless, inventories still remain at the top end of the range. And also, I want to point out that if you look at the energy complex, we're seeing selling pressure pretty much across the board today, with natural gas down almost 4% at the 2.11 level. So selling pressure here continuing to persist. Some at least short-term simmering of geopolitical tensions, and inventories continue to holding at the top end of the range, providing headwinds for the complex.